Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, premium members, let's do a preview of what I think could be happening in the upcoming session. This is Sunday afternoon. Here in Texas, it's about, I don't know, noon maybe. Yep, just before noon. So the market will open up in about 5 hours here. Okay, I'm in Central Standard Time for those that want to know. So today is 12/3. Actually, I think it's 12/2, but it's going to be marked as 12/3 because all the trades that are made Sunday night, well, this is 12/5. Okay, 12/6. Okay, just simply because it hasn't opened up yet. Let's take a look, right? 12/3, yeah. So we'll be open, a new session, candlestick's going to open right there in like 5 hours from now. Okay, so we're really looking at 12/6 is what it's going to be, is what's going to show up next. Excuse me. Okay, so what's going on here? Let's take a look and see what's happening. Well, the first thing I want to talk about here on the daily chart is take a look at this volume here, guys. Okay, over the last 4 days. That volume is higher than anything, well, almost, yeah. On the average, this volume is higher than any day, right? This one was at, that volume is probably not going to give me a volume number, but whatever it is, we can see the line going across the screen is a little bit lower on its best day than what we have going on over here. Okay, so this volume for this event is much higher, significantly higher. So that right there tells you a lot. The size of the candlesticks are larger. Okay, they're just, all of them are just larger. So that says a lot. So this event that we're going through right now, whether it bounces hard and goes all-time new highs, whatever, it makes no difference. I'm just saying this event right now is bigger than anything that happened in all of this. Okay? Which means there's a lot of effort going into liquidating and selling, right? That's what that tells us. And the MACD, guys, I mean, yeah, it could change. You know, it could stop right here and start turning, like these indicators are trying to suggest that. But I mean, the Big Daddy isn't. Not at all. It's actually turned back down. Okay. It's, you know, well, we're still above, we're still riding on the 50. Just riding right on it. The way this MACD right now, the way it's behaving, I mean, even if we get this, though we're at a completely different spot because we're really still riding on the 50. I guess you could say for the most part we're above the 50, kind of. We didn't get this where we didn't get this candlestick yet where we broke below it, right? That hasn't happened. We're an entire candlesticks below the 50. That hasn't happened. So, you know, I don't know for sure that's going to happen or not, but it looks like it's going to try to do that. Now, I talked about this several days in a row last week. And I said, you know, this time right here, these candlesticks right here that we're looking at, reminds me of what's going on right here, okay? Very similar. This consolidation of candlesticks along the 50. And then the question is whether or not it's going to break below the 50 real hard. Well, we'll have to wait and see on that one. But the behavior looks very familiar, but it's way more aggressive. Because we've had now 1, 2, 3 candlesticks where they've gotten below the 50. Okay, whereas over here that didn't happen. You know, those 3 candlesticks right here that consolidated, they were all above the 50. And then finally got one that broke below it, and then the bottom kind of fell out there a little bit. So just, before we dive into anything else, just behavior-wise, the whole price action and the candlesticks, the way they look right now, I still see a lot of weakness here. Now, granted, this candlestick had a pretty decent lower wick, so some would say, okay, that's it, we're going to turn and go up. When you begin to see something like that. So we'll have to wait to see how this plays out, going into the rest of the week. Now, just looking at the daily here, before we go look at some other time frames, just be aware that, again, I want to remind everybody that 12:15 approximately is either an expected low right there at 12:15 or Christmas Eve. Okay? So this time in here, as we get into the second week, third week of December, that to me looks like a time of weakness. Okay. So I don't know. Maybe we get a big strong bounce in here before that happens. There's not a whole lot of time left to the 15th. A week's worth of trading, maybe a week and a half. So we'll have to see what happens. This could bounce up, and then we'll just see. But the weakness is there. If I'm pulling from this on a cycle analysis standpoint, that's definitely a low right there. Wasn't much of one, but it definitely showed up, right? So they gave us a little bit of an anchor and something to go on. Then the only question is whether or not we were pulling from that one, from that low right there, or pulling from this one. Take your pick. Okay. Now there were some questions, so I think before I move on, let me answer some questions. Okay. So the TOS platform that I know of doesn't have breadth indicator, and I don't know if it has a tick value distribution indicator. I kind of dug around in the indicators a little bit, but I didn't see anything. There may be one that exists and I just don't know about it, and it may be fairly easy to script up. If we really have to dive into that, we could. But I'm pretty sure, yeah, there's an advanced decline, so let's turn that on. Okay, so there's your advanced decline down there at the bottom. I don't know how helpful that is, but we'll leave it on there for the rest of the video, so for those that want to see it. Right now it's at 26969, if that means anything. Okay. And I think there's another question about if you're holding futures, and can brokers basically, can they prevent you from going short? Yeah, of course they can. On futures, I think specifically was the question. Yeah. Brokers can do whatever they want. I think a lot of people would be surprised to hear that. Brokers can do just about any damn thing they want. When you sign sign up for your brokerage account, you might want to be aware of the fine print. They can do just about anything they want. It doesn't mean they can't be sued, but usually brokerages win lawsuits. And retail investors usually get screwed. Now, I think it was back in 2018 when there was the big 2018 sell-off going into, October's, November, December. That was a massive sell-off that whole entire time, all the way to Christmas Eve. I know for a fact there were some brokers that were shut down for hours, hour, two, whatever. There was some circuit breaker stuff going on in there at that time too, but there were brokers that just shut down their server, or just not necessarily shut down their server, but denied access. Okay, but other brokers were up and running. How do I know that? Because I have more than one brokerage account. So I have one broker that's up and running, another one denying access. Okay, so it wasn't something like, some circuit breaker rule that was preventing one broker or preventing brokers in general to deny access. No, it was just one broker decided to deny access. Now you can go into all the excuses, but it happened more than once during that 2018 event. Happened several times. Okay. Yeah, it was TD Ameritrade. They were denying access. Now they could come and say, oh, we had servers were overburdened and blah, blah. Who cares? I don't want to hear the BS, It's total garbage. If you're not prepared to handle, a significant time of sell-offs or high volume through your servers, well, that's not our problem. That's your problem. Oh, we couldn't get data from the so-and-so, and so we had to shut it down. Yeah. Uh-huh. Right. But meantime, other brokers are up and running fine and getting data from the exact same sources, by the way. So I don't buy any of that BS. Yes, brokers can do whatever the hell they want, and they do it, and they play dirty when they feel like they need to. Anybody that tells you otherwise doesn't know what they're talking about. Brokers do play dirty. They'll do it. And they don't give a damn if you've got orders sitting there waiting to be executed, and the market's still chugging along while your broker's sitting there denying you access. They don't give a damn. Yep, they'll do it. So don't be shocked if it happens, if this thing starts taking off, whatever brokers you got going on. Some brokers will do it, some don't, some whatever. Maybe they have legitimate technical issues, maybe they don't. Who knows? Even the CME played dirty in 2018. They played dirty. They did I'm trying to remember a few things that went on during 2018. I remember because I was trading at that time. And yeah. Oh yeah. They were crying about how they couldn't get data to certain brokerage houses, but others were okay. And we're working on the problem. We're working on the problem. That was from CME, not from a broker. So think about it. Now I want to ask you this before we move on to the other time frames. And this is really important, so don't just gloss over it. Because if the bottom does drop out on this, what do you think CME is going to do? You think they're not going to do it again like they did in 2018? They could if they want to. So think about this for a second. If the market's a fair place, if it's fair trading, right? Because that's the premise, right? That the marketplace is fair, everybody gets to trade equally. Everybody has an equal opportunity to trade. Because if that's not true, then what the hell are we doing? Sure, I'm not talking about block trades, which those alone are total bullshit and shit, excuse my language, that's BS and they shouldn't be happening. Okay, but in any case, think about it. You got one broker, you got some brokers that are getting CME data and others aren't. Now I ask you, in that environment, is everybody having a fair opportunity to make trades? Well, of course not. And you got, who knows, millions of accounts that are offline on one broker while another broker is trading. They're moving the market, right? There's still heavy influence on the market from other brokers all around the world and block trades and everything else going on. Okay, and you're at a broker where they're being denied access because CME says we're having a problem getting them data, blah, blah, blah. Yeah, right, you have a problem getting them data. It's called we're shutting you out. It's as simple as that. TD Ameritrade has one of the largest amounts of retail accounts in the world. And there are, it's not just TD Ameritrade, there's others, but think about it. TD Ameritrade, not allowed to trade at all. In 2018, it happened more than once. Okay, during the end of 2018, during that big sell-off. Think about that. You have an account with them, like I do, and you can't trade, but other brokerage firms are allowed, CME data is getting to other brokerage firms and they're allowed to trade. Like, Interactive Brokers, let's say, I think was up and running at that time because I had an account with them too. And they were getting data. So think about that. If CME wanted to do things fairly, they would have told every single broker in the entire world, we're offline until we fix this problem for everybody to have equal chance to trade. But they don't do that. Hell no, they ain't going to do that. Because then they're going to have to deal with all the crying and complaining. So they let some brokers continue on and get their data while others don't get it. And you could guarantee when they finally came back online, there were a whole slew of clients that got screwed. Tons of them. And I bet TD Ameritrade is not the only brokerage firm that had to deal with that. They were shut down, and I believe to this day they were shut down on purpose. So I hope that answers the question. Yeah, there's a whole lot of dirty tricks going on. And during times of high volatility, they'll ramp up the dirty tricks. I'm thoroughly convinced of it. That isn't just the Federal Reserve and BlackRock, but that'll be CME, your big brokerage houses. I don't care. They all play dirty whenever they damn well feel like it. And don't you forget it. And I'm not being cynical. That's the truth. I've personally experienced it. I was fortunate during that time because I either had very small positions or whatever, and I didn't really get impacted. So you could be doing everything right, guys and gals. That's the sad state of affairs in the way this world runs. You could be doing everything right. You could have all your little ducks in a row. Okay? You could have your stop losses there, your trailing stops, blah, blah, blah. That doesn't mean a damn thing if that brokerage firm is down and the market's blowing right on past your stop losses. So anyway, let's move on to the shorter time frames. And you know what? First, let's go look at the monthly. This monthly is an ugly mess. It's shaping up, I should say, to be an ugly mess. There's just no getting around it. Now, does that translate into big price decline? I don't know. Okay, look at this over here. Okay, there's a difference. But I'm not just looking at divergence warnings. But, you had 2 months that were down. Okay, the difference right now on the monthly chart, and I talked about this on Thursday, Friday, I think, is this is just huge. Look at the size of that gap. Now, I want you to look right here. This is the pandemic crash. Look at the MACD. Little, no, nothing going on. Back then, it probably looked like it was a big deal. Look at it now. Okay? So, the monthly chart looks like it's ready to do some type of catastrophic drop. Okay? That's just me eyeballing this without even getting too fancy. We've got declines going on in the indicators. We've got divergence warnings going on, and it's accompanied this time, which is different than any time in the recent past, at least for the last decade or more, is this MACD is huge. The gap in the MACD is massive. So like I said last week, this could play out for months. Months this thing could play out, flatten out. It could flatten out like this over here for months before it finally gives it up and rolls over. Or it could play out much quicker, but we'll see how that goes. So that's my take on the monthly. Let's look at the weekly. Yeah, divergence warnings, indicators pointing down like there's more room to go. Okay, but they don't always go all the way down. Look, that one stopped short. Okay. MACD isn't going to give us anything on the weekly. But there's a lot of room between the bottom of this candlestick and the 50-week, which right now is 4219. All right. Yeah, I know the video is long, but it's worth it, right, guys? Because we're talking about something that we really need to take a look at. Okay, let's look at the hourly. I don't know if that advanced decline down there is going to do much good in the hourly, but there it is. All right, so this was something I was kind of eyeballing earlier, and I'm looking at this, and something stood out to me. Let me switch the drawing set. You can always pause the video here if you really need to look at this anytime. Let the advanced decline line. Okay, but for right now, I'm going to give this thing some more room to breathe because I want to see something here. Okay, so I want to talk about something here. So, I mean, even to the untrained eye, something should be really obvious here on this chart, right? You got an upper trend line that's been established and it's acting as rejection. So that's number one. Number two, every time so far, anytime we've gotten to these rejection, of course, it's always been above the 50-hour. Gets well above it, gets rejected. Well above it, gets rejected. Well above it, gets rejected. So the 50 itself isn't acting as rejection on the major cycle, because if you don't realize it, that's a cycle going on right there. So let's take a look at something here. From peak to peak, because we usually, in cycle analysis, we usually talk about the troughs or the valleys. And you can see right here, this by the way, is an hourly cycle. So I guess we can talk about that first, okay? Then we'll talk about the peaks, because something interesting stands out in the peaks to me. So you can see that there's, very timely lows, right? Very timely lows. I mean, it's just obvious. There's a timely low there. There's a timely, right? Cyclically speaking, even after this big, huge hourly decline, it still came down spot on to this predictive cycle low. So where's the next one? With bated breath, we all want to know. 1:15 a.m. tonight. Do I think it'll do that? I don't know. We'll wait and see. Let's see. What is this? What time was this? It looks like end of day. That was noon. What was this one? That was 11 a.m. So far that happened intraday. That was 6 or 7 a.m. So this one, may not play out quite the same way because it's happening at 1:15 tonight. So yeah, that may not exactly play out. But just understand 1:15 my time. Or in other words, that would be about 6, 7, 8 hours after open. So whatever time you have your open, this cyclical low on the hourly chart is expected 8 hours later. I'm not sure it's going to play out that way because that's kind of an odd time. So far they've all been happening intraday, or close to it at least. All right, so that's that. And then if you want to know that one way out there to the right on the hourly, that one would be 7:10 p.m. on December 7th. Again, that's CST time. Okay? Pause the video, go back, you can look at those timestamps, whatever you want, okay? Okay, let's talk about these peaks. So I noticed the peak is approximately every session in 3/4. So you may not be able to see it in the video, but one session is from there to there. And another session, I'll just kind of draw these vertical lines as where sessions begin and end, okay? That one, and that one. Okay. So you'll notice that this peak is right here. So we had a full session, and then we had about a session and 3/4. So the peak is right there. Okay. And then it kind of repeats itself, right? You have a full session, and then another 3/4, and it's right there. Okay. And then we have a full session, and about a little more than half of the way through this session, we get it again. That's because this session over here, you got to make up that little bit of distance. So every 1 3/4 sessions, or I should say full days. Okay, we're talking about full days. So I'm really not, for those they're used to trading spider and all that stuff, that you don't really not familiar with futures. Well, futures just 24 hours. Okay, you got to think differently. So what does that mean? Well, the next peak would mean that, if I were just to draw that, let me back out now. Let me add some time into all this. This thing's being kind of stupid here. All right. So, let me grab this. So what does that mean? That means a session and 3/4 approximately from there. If we come down, that's a full set. It'd be about right here. Be somewhere right around in there. Okay. Whatever this does, okay, and there's no guarantee that these cycles are going to continue on such a short time frame. Okay, this thing could totally change and shoot to the moon for all we know, But that would be the next peak. So it'd be like that, which puts us at 45.66. And it does it at 5 o'clock in the morning, my time, December 7th. Okay? Pause the video, make note of it. There you go. 5:15, December 7th. Okay. This is just so, gosh. If you can't see that this is planned, I mean, my goodness, I mean, whatever. This is what we call planned. This is designed specifically to do what it's designed to do. Okay, whatever. Okay. And of course I could change it at a moment's notice. So there you go. That's the hourly thing. Okay, the other thing is, let's see. It was this, it was this, it was this, it was this. And then, so what I want you to notice before we continue on is that this low was only a little bit lower than that low. Okay? And it continued, but of course we had this big sell-off. So we got this, we got this. And what do you see now? Well, what do you know? This low is just a little bit lower than that low. Look familiar? Okay. So somewhere right around there. Yeah, just past the end of that little line. Something like right about there. Okay. Who knows? This may do the jiggy jig jig, but whatever. Something like that. I don't know. Doesn't matter. If the pattern holds true, okay, then that's where we're headed. Again, 45, 66, 68, whatever, somewhere in that area, okay? All right, so that's just basic geometry recognition. All right, now let me push up some of these indicators so I can look at these a little bit better here. And of course, you can skip around these videos, guys, all you want, but I'm just thoroughly going through this. So even though it's a long video, this is one of those more exhaustive type of analysis, okay? So hourly looks like this thing wants to bounce. Makes sense to me. We just got done talking about how it would work its way all the way back up over here to 45.66. Okay? Makes sense to me. Interesting. Interesting because we're not really far below the 50. We're really not that far below the 50. Kind of reminds me of this. We could get rejected there. I don't know. We'll see what happens here. This is like, we didn't really get that far below the 50. So I'm trying to take a look. Okay. What happened? Yeah, I wouldn't be surprised to see this get rejected here. Maybe come up with the open and get rejected. But indicators are in a different spot here. What was going on right there? Okay. Yeah. Okay. That one right there. Yeah. We could see something like that. Could get something just like that where it gets rejected. Okay, and that these indicators just stop right up in here. Kind of like this time. Okay, so I don't know. We'll have to see. This could get rejected and come down, which would make sense if it follows that hourly, follows this cycle right here about 1:15 in the morning. Okay. Let's take a look at the 5-minute and finish this up. Well above the 5-minute end of day. Took off. 5-minute looks kind of peaky here. Right? Looks kind of peaky. Okay. So be aware of that on the open. The 5-minute looks peaky. There's not really much to say about the 5-minute right now. It's above the 50 and it's just, it's dead fill at the end of the day. Nothing going on there. So I would just, be aware that it looks kind of peaky. We'll have to see what it does at the open here. The 5-minute at the moment looks flat. Okay. Are we just going to get something like that? And then time was that? Well, that's intraday, so forget that. So it's going to be interesting open to session, guys. Interesting open to session. One last look at that hourly. Yeah. Okay. That's my take on what I think is going to happen in the S&P 500. Remember, on the daily chart, middle of December, third week of December looks risky for more price decline. Short term, December 7th, somewhere right around here, kind of 5:15 in the morning on December 7th, would be the anticipated peak. Doesn't mean it's going to obey that, but it'd be something like over here, okay? If we get something really aggressive and this thing just blasts off above this trend line, then we know the behavior of the stock market's change. Okay, so beware of that on that trend line if it gets above that. If you got charts, guys, just draw your trend line up there. Okay. All right, guys and gals, long video, but I think it was worth it to be a little more exhaustive today. Talk to y'all real soon again next time.